and there's 10 interviews in the podcast, but the most recent one was with Paul Singer from
from Elliott.
Elliott, who's manages 40 billion just quietly and has done it for 75, like since 1975. Is an outstanding. Did you listen to that, Ira?
I've listened to half of it. I have not listened to the whole thing. No.
Yeah, right. So, let's fast forward 6 months, and I think the firm's pretty much been doing well on the basis that we try and buy the dip. Be wary that the dip may one day not be the dip. But we're going higher. But how do you think this ends? I mean, what's your end? I mean, there's not an end game because there will be another monetary system. But what are you watching for to be prepared for?
Well, again, there's a lot of people who are not concerned with if yields go higher. In fact, I'm amazed people are still talking about higher yields. I know one of the Eastern European banks raised rates this morning.
And the Chinese withdrew the liquidity today. It's got the market a bit. The Chinese withdrew some liquidity today in the system. That's what the market.
Yeah, which was interesting. I think that's what, but that's just now. Was that an intent? Because now the yuan's back down to 6.46, and again, it's amazing. It's the other day when the yuan was weaker, we had a little sell off in the commodities. It's really interesting to watch, and you see the beans just took back off. Not that everything else did. But again, what is going on with the Chinese? And
they also announced record buying of wheat from Australia.
Yeah, I saw that, and I'm glad you brought that up. I'm not gonna be on for long, but that is interesting, right? Especially as they talked about boycotting Australian products because they were pissed about the stance that the Aussies were taking in line with the U.S. And here they are. So does that, Judd, I'm glad you brought that up because that should send a signal that there's a serious worry about a grain shortage. And that's because they're even buying from Australia. And, they've been going nose to nose with the Australians. Andrew could tell far better than I because he reads the papers there. But it is interesting to watch. There are very serious things going on here. But Andrew, the fact that you bring that up, the fact that they're doing it at 6.46, they're tightening. That's unprecedented for them. They've been when the yuan has been strong, they have traditionally found ways to get more stimulative, right?
Absolutely.
Okay, so that caught my eye. So I'm glad you brought that up. And again,
it's what threw the market down yesterday more than anything else. But it also, interestingly, in price action wise, because I was, I'm not a cat in a hot tin roof yet, but in 6 weeks I think I will be. I won't be hanging around long if the price action doesn't support. But the market came back strong. It's still showing signs of still not being over-owned and etc. in terms of, even though people say it's ridiculous, but 3 years ago or 5 years ago, we would both know negative rates would be considered ridiculous too. So right. That's why we're here. That's why we're here now. But I know you haven't got long. So how the hell does this whole thing end?
I'm sorry, I didn't.
How the hell does the whole thing end? What? Because it will end.
Andrew, the whole problem all along is there's been no exit strategy. None. Zero. They don't have an exit. And because every time they thought they had one, we've heard it over the years. Bernanke, starting with 2010 speech in Jackson Hole with the portfolio balance channel. And then we'll do this and we'll do this. And then we'll just let our balance sheet roll down, right? That was the first one. Then we went to the May, June of 2013. the taper tantrum, which he couldn't walk it back fast enough. And then I think Janet Yellen really would have liked to have started shrinking it, but then of course the Chinese started making noise, and she had to backtrack on any hint. Well, she raised rates actually, I think once or twice.
Have you read that book, The Fed Up by Daniel Martinez?
But I'm sorry?
Have you read that book called The Fed Up, by Daniel Martinez?
No, but I respect Danielle.
You should read the book. It's called Fed Up, which is, I think, a good title. And she essentially is supporting what you're saying, that, she sat at the Fed's table as Richard Fisher's, out of Dallas, Texas, Fed president, assistant, and said,
I know. I used to talk to Danielle after she left quite a bit, because she was trying to figure out what she wanted to do, and she was reading a blog, and it was good. Yeah, I know. So there is no exit strategy, right? Is that what she talks about?
Exactly. Yes.
Listen, how can there, when Powell thought he had an exit strategy, we know the Powell pivot took place, and that was even before COVID. So, and Chris Whalen has recently written about it too. How do you get out of here? Yeah.
But I contend, Ira, that while they don't have an exit strategy, I've been around long enough and read enough, the market will make one.
If they let the markets work, Andrew.
The market will find an exit strategy for them, and it'll be so bad it won't be funny.
Well, that's why I say we get to yield curve control before you get any type of real exit strategy, and then they'll try to work it out from there.
Paul Singer was interesting on that. I found his assertion, his judgment on that interesting. He said if they go there, the system will start to fail.
If they go where, yield curve control?
He thinks that the system will start to work out that, oh God, they've fucked it. There's nowhere out.
Who said that? Is that what Paul Singer talks about?
Yes.
Yeah, I know. So that's right. But I say it failed already. And I think others have come to the point because, again, the signaling mechanism is broken. And when bonds don't have the ability to act as a signaling mechanism, how do policymakers know that their policies are flawed? And that's what Paul Singer is, and others, and I think Jeremy Grant, they're all coming to that. And it's just a matter of what time, when does the bell ring? To quote.
As you know, it won't ring. You better fucking ring it yourself. And that's why, the old bastard that used to say to me, it's crumbs for the pigeons, Mr. Green. Used to shout at me and say, you're fucking trading with the pigeons, you dickhead. Yeah. And he'd say it like that.
Andrew, we've all had a lot of those conversations.
Oh, I know you have.
And at all times of the day and night.
I know.
Let me ask you, why is the Aussie up today? Why is the Kiwi? And they're not just. It's
a fantastic question. I shouldn't say question to.
Hey, you got no RH day in the Aussie. Look at that pattern. I mean,
and absolutely. But the point is, at lunchtime yesterday in Sydney, Aussie was 76.80 or 65. It'd been punched from 77.60 when the tightening came out of China. So this is a classic instructive board in the last 24 hours. But the Aussie's telling you this market's not finished yet.
And here's another interesting point as far as I'm concerned. Will the yuan go to 6.25? You look at the chart, you can see what a big level that is going back a few years.
Well, I'll tell you, Judd, you should go to the yuan. They devalued in 2016.
Where the hell's my yuan sticker?
17.
Yeah.
17. And I think the low was 623.
I'll put the chart. I'll take a look at the chart right now. We don't.
Hold on.
Okay.
So, I think it was 6. I think the low was 623. 20. They won't let it go through there, Ira.
Yeah, that was over that weekend, remember? I think it was.
Yeah,
in
yeah, yeah, yeah.
August.
I remember it.
That-
Well, I actually
that's
had some
what-
calls on, and I didn't. I thought I'd go to 8, and it never went anywhere. They
that's what
controlled it.
Yeah, this quarterly you want chart's the one you want to be looking at.
Yeah,
Yeah,
that's the
go
one-
to if you go.
I
They
got it.
they devalued the price, and I think the low was 623 to 625 or something like that. It won't
That's
go
why
lower.
I come up, that's where I come from that number from, just that action. And that's the one that scared the shit out of Yellen, where she was talking about, possibly reversing. So, well, no, so you're going back to 18.
Well,
Yes.
this is 2014 right there.
It was
That's
later than
quarterly.
that. It was later
That was
than that.
later. So here, if you go to 2016, you'll see when Yellen, that was in August over that weekend when they talked about devaluing.
Here,
The value 1.8%, the markets went a little nuts and Yellen got nervous. But then in January, okay, look at the January quarter, which is where you're at, and that's where I come up with the 625. You see both of those quarters, the first quarter and second quarter in 18, right?
yeah,
And then, of course, the Fed is in what Druckenmiller called the double shotgun approach. They're shrinking the balance sheet and raising interest rates. We get all the way up to where? 2.5 to 2 3/4. So look at what the yuan does. So there was a tightening going on and it showed itself in the yuan very dramatically. And we get those two lows at 625. So that's the test that I want to see. And with what the Chinese decided to do yesterday, now it's a little early because they do a lot of head fakes because they like to play with the markets. Not quite like GameStop, but they have a different,
yeah, that really another $50 after the close. Here,
they have the Chinese have a stop game, not a GameStop. So
here, Ira, write down 637 on your
Okay.
sheet for the yuan,
okay,
because that's going to be the funky spot on the quarterly cloud.
okay. So I mean, we got Andrew picked up. Those are exactly the 625 area, and let's see where they go there. And
I don't think they'll. That's an instructive level. That was a big number. I think today, and it's a very, again, 6 weeks time, the S&P could be 200 and et cetera, et cetera. But today could be the first shot across the bow. Any tightening of policy in a system that's so fragile is a policy you must be watching. Must pay attention to it.
It was really hard to believe with all the negative news out of Europe today that the euro was higher. Well, and it's certainly not.
The DAX went through the fucking roof, but it's had a few bad weeks. It's up 2%.
And that's and all the comments out of Europe. I mean, you had the Italian prime minister resign. Yes, I know that was strategic. You have riots in, of all places, the Netherlands. You've got, there's not a whole lot of good, and yet the euro still finds a way to.
It looked like the Mideast, Ira. They were throwing bricks.
Yeah, well, those Dutch are the biggest people in the world, so be careful.
I know you haven't got much time, so you still haven't answered my question.
What's that?
What do you think? What do you seriously? I was saying before you entered the room with Angelo and Judd that the two charts that I want to be studying over is the S&P bond spread and the gold to Bitcoin. Because I think once gold gets leadership back, then everyone's got to be paying attention. It hasn't had leadership for some time. So yeah, I'm comfortable for the minute that the market is still going higher. So again, I make that clear. However, what do you think is going to break this whole thing? What, is it going to be the bond markets, the yields kicking higher, or what?
Yeah, but you know what? Well, as we went to the board the other day, we looked at the Feb 20 of 22 Fed funds, which are yielding, a robust 7 basis points. So that's a year out. So the market's not anticipating anything on the short end. In order to really break the gold market with significance, I think that it has to take place in the short end because that's historically. But if the long duration yields started going up, and we've talked about this, so I think if you saw the 10-year at 2% and the 30-year at, let's say, 2.7, 2.8, yeah, that would really weigh heavy. The gold would be breaking ahead of that because that's just the way the algos are trading it. And it would be a real yield. So I think you would have people, unless inflation jumped up, dramatically. But this is going to be, that's going to be a very tough correlation to make in the short to medium term, by the way.
But we debated this last year. We debated this last year, and your narrative was 100% right. Lacey Hunt came out with his recent, and I have great respect for the man, as I know you do. He's still of the view that velocity is not working. This is all smoke and mirrors. He's still of the view that bond yields go lower. And have you found a way of interviewing him yet, by the way? Ultimately, that's fascinating that he still thinks deflation is the biggest fear.
Well, Andrew, let me just tell you something. That is true. However, his line in the sand is if they start MMT, then he said all bets are off.
Oh, no, 100%. Angelo and he made, it was a podcast that he did with someone last year. I think I made exactly that point. He said, I think his term was if they cross the Rubicon, that is, the Fed is allowed to actually spend. Now, arguably by appointing Yellen as the Treasury Secretary is already given signs that's where they're going. But
I agree.
We may need a market event for that to actually happen.
I agree with you, Andrew, and that's the signal we're looking for. I have a few signals that I'm looking for. Otherwise, the markets can churn here. But again, I'm looking for either Powell to resign in a very high level. It's just he wants. I could write the speech for him that he wants Biden to get.
Just on that, because you made that comment a few times. Why does he resign now, or is he told to resign because they want someone more stimulative?
Well, yes, but he's not going to say that. He could say to Biden, "I'm available, but I want you to be able to choose your own Fed chair."
Well, Andrew, one other point too is that Powell is at his core not a fan of negative nominal yields.
Right.
Okay.
So
So if they start, pressing him maybe to start, doing the unorthodox stuff that they've been doing elsewhere in the world, maybe that's a trigger. Or they're like, hey, you're not reducing interest rates, blah blah blah, and he just starts getting pressure, from all sides. Maybe he says, okay, I'm done, I'm out of here. I don't know. I'm just saying.
That's what I'm looking for because he's going to get squeezed by Brainerd, maybe Clarida, because Clarida was the one who came out a couple of weeks ago and walked back some of the more quote unquote, I hate the phrase, but for lack of a better one, hawkish statements. And Yellen, being that she has sat in that seat, one of only two that has ever done that, and she is highly respected. You can see the respect that Lagarde laid upon her in her press conference last week. So all these things are in play. I mean, again, now people say, well, it's unprecedented. You know what? I've seen a lot of unprecedented things in the last 10 years, and especially so in the last year. So everything's unprecedented. I tell you what, Tesla having a greater value than all the other auto companies in the world basically combined, kind of unprecedented. Everything's unprecedented. Everything. interest rates?
I hate the word. What will be unprecedented is how long I get gold versus stocks later this year. That'll be unprecedented. But it's a. I read in the chat. Then someone said that GME just gained 4 billion because Elon Musk tweeted GameStop. I mean, what the fuck?
Oh yeah, it rallied $50 as soon as it's trading at 239 right now.
Cut it out.
It's trading at 239. It went out at 147. It's up $100. Right here. That's where it went out. There's the ticker, 242, 244. It just printed.
But basically, what they're doing is that they're going out with this story on this hedge fund that the guy has doubled down in terms of the margin call, whatever that was yesterday. I mean, I don't understand why anyone's whole life is about to be destroyed by one stock, because that's not how I trade. But your portfolio construction needs to be called into question.
Well, Andrew, with that, it's more about being right than making money.
It's shit trading. It's crap.
Well, of course it is. Of course it. Well, Judd asked a question a couple weeks ago. When does the trader become an investor?
that was me.
He's an investor now. I'll tell you that. Well, he always.
Yep.
But here's the thing, I'll kind of close the conversation on this because it's getting late for everyone. But when I worked at Tudor, and it was 50 PMs, and I was in London, had a office at Epsom, and there was a bloke, very good trader, and Paul's banned him from trading JGBs because he became obsessed with being short JGBs, which everyone was in those days, if you recall, Ira. And the guy set up, and he's all, he's mid-30s, so he's all ballsy, and he said, sit down. I want to tell you two things. I want to save you from yourself because I fucked it before, and two, I want to keep you married. He said, the mental destruction you're about to go through is not worth it. You're obsessing over a trade, and that's not how to trade.
Absolutely. That's right. That's the greatest advice you could have ever gotten. But again, if you tell me what the exit strategy, and I keep listening to people who explain to me, once those inflation numbers, if we hit I still don't see it. I see this Fed and the administration totally focused on the employment situation.
Yeah. No,
it'll be interesting, right? Is if with Yellen, right, they decide that we're not going to bail out Wall Street anymore, but we're going to send checks to certain income groups, like under 100,000 or something like that. Can you imagine, right? If they tell Wall Street, sorry, but we send checks to, middle-class people to prop them up.
Angelo, this is the last thing I'm going to say, but you bring up a very good point. The person who they put forth as the head of the Consumer Financial Protection Bureau is an acolyte of Lizzie Warren. And the markets.
Yeah, is that Roos? Is that her?
No, it's a guy.
Oh, it's a guy. All right. I thought it was.
Yeah, you can look it up.
Else.
And the market's been very subdued about this. I'm going to tell you what. Wall Street thinks that they bought the Biden campaign because they gave tons of money to Biden. Be very leery of what's going to go on here, because you bring up a very good point. How are the Wall Street banks going to be treated? Not that you know what? You know me. As I say, I make my money from Wall Street, not on Wall Street. So
yeah, exactly.
Hey,
Yeah.
Ira, what was that conversation about Gensler? Why was everybody up in arms about him?
Gensler?
Yeah.
Well, the progressives backed us, and I just didn't understand. Gensler, to me, too arrogant. I will hold him forever responsible for the light touch on John Corzine. So I don't know how the progressive wing of the party could possibly back him. And I just think he's way too arrogant. But my bottom line, and I had this conversation with a couple of lawyers who you know, and guys who I really respect, who are in the league, who do securities and commodity law, and they couldn't say no to me. But I said, "You watch, he's there because he's going to try to combine the SEC and the CFTC."
There you go.
And I'm not going to disagree that it's whether it's right or wrong. That's not the same. But he's the one who thinks he has the ability to get it done, especially because he chaired the CFTC before.
Well, and those guys rewrote and reinterpreted their own charter.
Watch this, and I ruined their days. Two lawyers. I said, "Holy, because it's just, it's like a nightmare for them." Well, we'll see, but that's what I think. He was put in charge of the SEC for a reason.
Yeah.
So another thing to keep our eye on. All right, I'm jumping off. Hopefully,
See you guys. No, I appreciate
Thanks,
it.
everybody.
Yeah, thanks, guys. Take care.
Hey, it's been snowing here for a day and a half. So
Come on.
Well, I'm about to go to the beach.
Get out of the seat.
I'm serious. I could take a picture. The mountains are white.
Well, I'm about to go to the beach. So
Oh, okay.
Oh, you're killing us.
Okay.
no,
Okay.
sorry.
Andrew, get that Speedo out. You Australians, you got to get that Speedo out and stay away from the sharks.
Take care, everyone.
All right,
Bye.
guys.
All right.
Thanks.